Virgin Galactic's latest move has sent the stock down by over 10% as investors are worried Richard Branson might be scared of what's about to become of the US economy. So what did the company do, and should you be worried? Sit tight for the next 10 minutes as we tell you the whole story. But before we do that, subscribe to our channel $1 World for regular SPCE stock updates. Virgin Galactic, founded by Sir Richard Branson, has recently announced the strategic move involving a workforce reduction and a temporary pause in its space flights. This decision comes as the space tourism company aims to navigate challenges in the capital markets, conserve cash, and redirect resources toward the development of new spacecraft. The company plans to lay off 185 employees, constituting approximately 18% of its workforce. The layoffs are expected to be completed by early next year, reducing the total employee count to 840 full-time workers. The estimated cost of severance, benefits, and other termination expenses is projected to be $5 million. During an earnings call, Virgin Galactic executives did not provide specific details about the locations of the layoffs. However, they mentioned a reduction in operations related to the company's current spacecraft, the VSS Unity. The VSS Unity, Virgin Galactic's existing spaceplane, operates near Truth or Consequences, New Mexico, where it launches, and receives support from the propulsion team located in Mojave, California. Virgin Galactic has a significant presence in California, with the 61,000-square-foot Orange County headquarters serving as the company's design and engineering center. Additionally, the company has manufacturing operations in Mojave, where it conducts test flights. The decision to pause space flights in mid-2024 is part of Virgin Galactic's broader strategy to focus funding and resources on the development of two new spacecraft, referred to as the Delta-class spaceships. These next-generation spacecraft are designed to address the limitations of the VSS Unity, which is costly to operate and has a restricted launch cadence. The Delta-class spaceships are envisioned to offer improved capabilities, flying 8 times a month compared to the once-a-month cadence of the VSS Unity. With increased seating capacity, these new spacecrafts are expected to generate a higher monthly revenue projection, ranging from $21.6 million to $28.8 million per ship once operational. Flight tests for the Delta-class ships are anticipated to commence in 2025. Virgin Galactic's decision to implement layoffs and temporarily pause spaceflights is driven by the financial challenges associated with concurrently developing the Delta-class ships and funding the ongoing operations of the VSS Unity. The company reported revenue of $1.7 million for the 3-month period ending in September, a significant increase from the $767,000 a year ago. Despite the improvement, the company still reported a net loss of $104.6 million, compared to $145.5 million a year earlier. Virgin Galactic attributed the improvement to lower operating expenses and an increase in interest income. To fund its ambitious projects, Virgin Galactic has relied on capital market fundraising. However, the company has faced challenges in the current economic climate, marked by rising interest rates and global unrest. Investors have become increasingly cautious about longer-term endeavors in the space industry that do not demonstrate quick profitability. Laura Forsythe, the executive director of space consulting firm Astralytical, emphasized the need for Virgin Galactic to take its time to ramp up operations. She noted the limited number of investors willing to exhibit the patience required for the company's gradual approach to space tourism. Virgin Galactic possesses cash and assets amounting to $1.1 billion, a sum deemed sufficient by executives to develop and launch the first 2 Delta-class ships. This financial position is also expected to enable the company to achieve positive cash flow in 2026. The current cost for a seat aboard Virgin Galactic's spaceplane is $450,000, reflecting an increase from the initial price of $200,000 that early enthusiasts paid. Research flights, catering to a mix of wealthy space tourists and researchers, command an even heftier fee of $600,000 per seat. As of December, the company reported a backlog of approximately 800 aspiring passengers who had collectively paid about $103 million in deposits and membership fees. According to its annual report filed in February with the Securities and Exchange Commission, Virgin Galactic is not alone in facing financial challenges within the space industry. Earlier in the year, its sister company Virgin Orbit closed operations after failing to secure enough funds. Similarly, Astra, a small satellite launch firm, is currently grappling with financial difficulties and recently defaulted on a loan. The commonality among these companies is their initial public offerings via special purpose acquisition companies, or SPACs, a trend that has raised concerns about the financial pressures and transparency associated with such public offerings. The challenges faced by Virgin Galactic and its counterparts highlight the complexities of the space industry. Where companies often balance the need for long-term investments and safety considerations with the expectations of investors looking for quicker returns, the decision to go public through SPACs, while providing initial capital, has also exposed these companies to the scrutiny and volatility of public markets. In conclusion, Virgin Galactic's recent strategic moves, including workforce reduction and a temporary pause in space flights, underscore the challenges faced by companies in the space tourism sector. The decision to focus on developing next-generation spacecraft reflects the company's commitment to addressing operational limitations and improving its overall business model. However, the broader financial pressures and market conditions in the space industry, exacerbated by the SPAC-based public offerings, pose significant hurdles. The success of Virgin Galactic and similar companies hinges on their ability to secure funding, build investor confidence, and navigate the evolving landscape of space exploration and tourism. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's talk about SPCE stock in more detail. Virgin Galactic Holdings Inc., or SPCE, has been experiencing fluctuations in its stock price, reflecting the challenges and opportunities it currently faces. As of today, the stock is trading at $1.79 with a 52-week range of $1.38 to $6.61. The market cap stands at $638.82 million, and there are 367.14 million shares outstanding. The stock has a beta of 1.56, indicating a moderate level of volatility. The average trading volume is 12.17 million shares, and the company has reported an earnings per share, or EPS, of negative $2.13. Notably, Virgin Galactic has a debt-to-equity ratio of 86.02%. Suggesting a relatively high level of debt in its capital structure. The one-year target price, as projected by analysts, is $3.75. Recent news and events have significantly influenced the company's trajectory. On October 30th, 2023, Virgin Galactic made headlines by announcing a series of strategic measures aimed at conserving cash and striving for profitability. The company disclosed its intention to cut jobs by approximately 30% and implement various cost-cutting measures. This decision underscores the company's commitment to addressing financial challenges and aligning its operations with long-term sustainability. Subsequently, on November 6, 2023, Virgin Galactic released its third quarter 2023 earnings report. The company reported a net loss of $62.7 million, translating to $1.73 per share, against a backdrop of $3.9 million in revenue. These financial figures highlight the ongoing financial struggles faced by Virgin Galactic, emphasizing the need for the company to implement cost-saving measures. Analyzing analysts' ratings provides further insight into the market sentiment surrounding Virgin Galactic. The average analyst rating for the stock is classified as hold, indicating a neutral stance on the company's prospects. The highest analyst price target stands at $3.75, suggesting potential upside, while the lowest analyst price target is $1.50, indicating a more conservative view. From a technical analysis perspective, Virgin Galactic's stock price is currently trading above both its 50-day and 200-day moving averages. This suggests a certain level of stability and resilience in the face of market fluctuations. However, the Relative Strength Index, or RSI, is above 50, signaling that the stock may be overbought. Investors should be cautious of potential corrections or pullbacks in the stock price. Talking in more detail about Virgin Galactic faced a setback as its stock, down about 8% at 10 a.m. ET, reflected the company's decision to trim its workforce in a bid to conserve cash and move towards profitability. The space tourism pioneer, which achieved a milestone earlier this year with the successful launch of Space Tourists, is now grappling with the financial realities of the business. Originally a SPAC stock, Virgin Galactic went public in 2019 with grand plans to regularly transport space tourists into orbit. Despite facing engineering and pandemic-related delays, the company has managed to establish a consistent launch cadence and generate revenue. However, the crucial question is now when these spaceflights will translate into profitability. To navigate the challenging landscape of the space industry, Virgin Galactic is adopting survival measures, recently initiating a strategic realignment that includes a workforce reduction. The details of the layoffs were not disclosed, with further information expected to be unveiled during the post-earnings conference call following the release of third-quarter results. With the long-term goal of developing the Delta vehicle, a spacecraft capable of more frequent launches at a lower cost, Virgin Galactic aims to achieve profitability. However, the space business is known for its difficulties, and the current challenges, coupled with limited access to capital due to higher rates, underscore the significant hurdles Virgin Galactic faces on its journey. The recent news of workforce cuts serves as a stark reminder of the tough road ahead for the space tourism company. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comment section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.